Thank you for watching this video. Today we will be doing technical analysis on the stock market for Thursday, January 13th, 2022. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for. And I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the developer and president of Simple Market Signals at simplemarketsignals.com. The first chart that we're going to focus on is on the S&P 500, and this is a one-day, one-minute candlestick chart of the S&P 500. So each candlestick on this chart does represent 1 day of trading. And you can see here in this dotted blue line, by the way, this is where we closed yesterday. So we opened up positive, and for the first half hour, roughly half hour, you can see we were doing okay on the S&P 500, not up a lot, but doing okay. But you can start to see just around 10 o'clock here where the market started to roll over, and by 10:15 we were negative. And, we poked our head up, for a few minutes over, the good portion of the morning, as we can see here around this flat line. But just shortly after noon, you can see that the market started to sell off and continue to sell off for the balance of the day. And we closed right at the lows of the session. We were down 1.42% on the S&P 500 today, and we closed at 4659.03. The next chart that we're going to look at is for the Triple Qs. Of course, the Triple Qs is an ETF that tracks the NASDAQ 100 index here in the U.S. You can see a very similar pattern. We opened up positive. Again, remember the dotted blue line is where we closed yesterday. So we opened up positive on the Triple Qs and then started to sell off just shortly before 10 o'clock, as we can see here. And then, you can see here just before 10:15, the Triple Qs actually went negative, where we were closer to the flat line for most of the morning on the S&P 500. Triple Qs were negative really by 10:15 and then continued to deteriorate throughout the day, again closing right at the lows of the session on the Triple Qs. So this was definitely a weak area in the market, and as you'll see, and I'll show you here the sectors in just a second. We'll take a look at some sector performance for the day for the S&P 500 because I find that quite instructive. So if you're not used to doing that, please stay with me because it's super important. But again, closed right at the lows of the day today. Generally not a good sign, but we'll have to see what tomorrow brings. The Triple Qs down 2.50% today, so really bad day in tech. And on the Triple Qs, we closed at 377.66. That really doesn't tell us as much, right, as what it does on the S&P 500. Any of you that have been watching my work for a while know that 4,700 on the S&P 500 right here has been a very important level for several months now, really since the 5th of November. And you can go back and look at some of my weekly videos on that, and make sure, of course, you check back in with me tomorrow. Watch the weekly video that I usually put out on Fridays or sometime on Saturday, and we'll do a weekly wrap-up. But I just wanted to focus on today, and some of the one-day action because of the weakness that we've seen in the markets today. Now, these are the 11 sectors inside of the S&P 500. These are the ETFs that we use here to track those sectors, and we can clearly see, and this is just today's price action, by the way, you can see that there was 3 sectors: the utilities, consumer staples, and industrials that were slightly up. But the weakest sector today is technology, and that was down 2.54%. Now, the reason I like to do this work, even if you're just a straight-up S&P 500 investor, guys, it's important to understand below the surface what is happening, because consumer discretionary down 2%, healthcare down 152, but technology down 254. The tech sector is over 25%, even though there's 11 sectors. They're not equally weighted, right? The tech sector, as a weighting of the S&P 500, makes up over 25% of the S&P 500. So if the tech sector is down, especially down over 2.5% in 1 day, as it was today, that's going to be really hard, regardless of what the rest of the sectors do. It's going to be pretty hard for the S&P 500 to be positive. So the fact that we're seeing this weakness in the tech sector today, not good. Now, let's go back a week here. Let's change this to a 1 week performance data, and you can clearly see what's happening now. Energy has been just a monster, guys, and it was up 4.16% for the week so far, right, on a rolling 1 week basis. And then financials is also positive, up 138. Financials should benefit from rising rates. That's part of the reason why that is working. But again, you can see technology down 180 for the week, and then consumer discretionary, also another very important sector within the S&P 500. And both tech and consumer discretionary are kind of the two primary, along with communication services. They're the three primary sectors that I want to see perform well because they have growth associated with them, right? If the tech sector and consumer discretionary sector, especially those two, are not performing well, what this tells us, what this shows us, is that growth is under pressure, okay? And communication services, by the way, has not performed well for many months. And, of course, my subscribers know this. I've been pointing that out. So we know that that's been a weak sector for many, many months. But energy has really been the one thing that's been working for quite a while. And as a matter of fact, I'll give you a little extra heads up on this, guys. Look at this. Energy over the last year, up 52.72%. The next best performing sector is real estate. And but you can see the performance that we've had in the energy sector. I'm not saying go out and jump into the sector, but just on a relative basis, it has performed very well over a 1 week, a 1 month, a 1 year period, and it looks like that may continue. For the day, as we can see here, a lot of weakness in the market, but especially in the growthier areas. The tech sector down 2.54%, triple Qs down 2.5%, the overall S&P 500 down 1.42% for the day. Let me ask you a few questions. Do you manage any of your own money, including in your 401k or your IRA? Have you ever found yourself out of sync with the market? Underexposed when the market is rising, or overexposed when the market is declining? If you answered yes to any of these questions, please pay close attention to the balance of this video, because it could be worth a lot of money to you going forward. Do you have exposure to the S&P 500 or other large cap U.S. equities? Would you like the opportunity to increase your upside capture, decrease your downside capture, improve your risk-return profile, and have the ability to sidestep major market downturns? To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. Would you like the advantage of knowing when it's generally safest and most profitable to be in equities, and when it's most dangerous and generally least profitable to be in equities? To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. Want more charts? Want access to proprietary market information? Want to minimize the likelihood you will experience catastrophic losses in the market? To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. Again, that website is simplemarketsignals.com, and I will also leave a link to this site in the description box below this video. Now let me share with you what subscribers are saying about Simple Market Signals. First, we are going to hear from KT from Michigan. I have been trading for many years. I did not realize that I have been trading in a completely blind fashion. SMS has given me the direction, literally, I've been desperately needing. This service allows you to clearly see what the market is doing. If you are remotely serious about trading or investing, you must try this service. Again, that's from KT from Michigan. KT, thank you. I appreciate that feedback. Next, we're going to hear from Rich A. from Ohio. Hi, Rodney. I want to thank you for creating Simple Market Signals and making it available to the average investor like myself. I work hard for the money that I invest, and I want to try to get the best return for my investment. Like a lot of people, though, I just don't have the time to watch the markets closely, and I've been blindsided a few times in the past by market moves I didn't see coming. Needless to say, if I could have avoided those downturns, I would be much further ahead financially. This is where Simple Market Signals comes in. It takes complex market data and distills it down into an easy-to-use tool that anyone can use to see where the markets have been and are likely to go. It is sort of like a barometer that a weather forecaster uses, only easier to use. I like the fact that I get weekly updates from Simple Market Signals and also get updates anytime there are important changes in the markets. Your emails are succinct and to the point, and the signals are easy to understand. Depending on how much time I have, I can quickly scan the main points that Simple Market Signals gives me or do a deeper dive and read about the various market sectors and their performance outlook. Either way, I get the timely and important information I need. Thank you again for doing this and keep up the good work. Again, that's from Rich A. from Ohio. Rich, thank you so much for the feedback. I really appreciate that. Next, we're going to hear from SC from Florida. And SC writes, I manage my own money and I am not a professional, which could lead to a disastrous outcome as it has for many. Simple Market Signals is the equivalent of having a personal money manager that keeps you invested when it counts and alerts you to the potential dangers ahead. Now, I want to point out here, guys, I used to be a money manager. I sold my practice in 2016. So these are the exact words that SC from Florida wrote to me. So I just printed it as is. But I want you to understand, I cannot give advice, but this is the feedback that SC from Florida gave me. So I appreciate this. So again, SC writes that Simple Market Signals helps you stay invested when it counts and alerts you to the potential dangers ahead. The service is extremely affordable and takes the uncertainty and fear out of being in control of your own investments. I have done very well using this system and consider myself lucky that Rodney's YouTube channel came into view one day. I highly recommend this to anyone who desires an easy system to produce positive returns in the markets. Again, that's from SC from Florida, sent from his iPad. And guys, I want to point out the reason I'm using just the first and last initials is for the security of my subscribers, okay? I have hedge fund managers, very well-off, multi-millionaire clients. I have, people that are high up in various areas of the government. I have people from all walks of life. So just out of respect and security for my clients, this is the way that I'm presenting the information, just with their first and last initials as well as their state. Next, we're going to hear from FS from Massachusetts. Rodney is spot on in his reading of the markets. I was looking for a heads up to help me choose which side to use for vertical spreads. Again, that's from FS from Mass, and thank you so much, FS. I appreciate that. Next, we're going to hear from JV from New York. Now, I posed a few questions to my subscribers a few weeks ago, and this is the feedback exactly that JV from New York gave me with respect to the question. So I produced it just as he wrote it. So the first question, what do you like best about Simple Market Signals? What JV said was, one of the things I like best about Simple Market Signals is that I have an easy-to-use tool at my disposal. I use the green, yellow, and red signals along with the general trend to help me determine how much equity risk exposure I want my investments to have in the market at any one time. I will either increase or decrease my equity exposure based on those metrics. The next question, what is important about Simple Market Signals to you? JV writes, I am a conservative investor. My main goal is to preserve as much capital as possible during market downturns, yellow and red signals, and to optimize my returns during green light conditions. The next question, how has Simple Market Signals helped you? JV writes, SMS helps me to determine whether to stay the course, increase equity exposure, or take defensive positions. For example, I will add additional funds to my equity investments during green conditions and move money to cash during red conditions. And the last question, how have you benefited from Simple Market Signals? JV writes, one of the benefits of SMS is that it has reduced the stress from always looking at and analyzing market conditions and worrying about it on a daily basis. And again, this is from JV from New York. JV, thank you so much for the feedback. I really appreciate that. To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. Again, that website is simplemarketsignals.com, and I will also leave a link to this site in the description box below this video.